The Bank of Japan is concerned about the continued weakness of the yen as it increases costs for Japan's domestic market. And it was this concern that ultimately led here to the Bank of Japan intervening in the yen around the end of September. And that sent the dollar yen sharply lower. However, history tends to be against currency intervention. The most famous example of currency intervention failing was the Euro-Swiss franc pair, when we saw around 2015 in January, the Swiss National Bank decided they would no longer keep their 1.2 region pegged. And you can see the Euro-Swiss franc fell dramatically lower through the area that the Swiss National Bank was trying to keep supported. So the Swiss National Bank, the most recent example of failing to intervene in a currency. So the Bank of Japan is going to be really wary about trying to send the dollar yen lower as long as US interest rates keep tracking high. As long as the 10-year yield keeps pushing to the upside, which it is, the Bank of Japan is unlikely to be successful in intervening. You can see here the intervention, on one hand, was unsuccessful because, yes, the yen gained, but then it quickly weakened as the interest rate differentials favoured dollar yen upside. Now, the seasonals are also against dollar yen fall. So you can see from a seasonal perspective, between October the 16th and December the 8th, the dollar yen pair has risen 10 times and only fallen 5 times. The average return has been 2.57%. So does this mean that the dollar yen will continue to track higher despite any actions from the Bank of Japan? Well, canny traders will see that both history and seasonals are lining up against the chances of success for the Bank of Japan. So any impact of intervention could be very short-lived. The major trade risk here, of course, is that the US pivot, they're less aggressive in interest rate hikes, and maybe the Bank of Japan change policy stance, and that would most likely send the dollar yen sharply lower. Remember, don't just trade it, but seize an exit.